morning, good evening, good afternoon, students and traders and analysts. This is Mike, the FX boss, with lesson number 10 today. And today we're going to talk about the unfamous consolidation. Alright? Yeah, you know I'm talking you know what I'm talking about. Never forget, trading is a learnable skill, everybody, and my job is to bring you from zero to hero, right? Possibly in 3 years, everybody. I'm here to help you to bridge the gap, as always, between a retail trader way of thinking and feeling and doing, the way, compared to an institutional trader way of thinking and feeling and doing, Okay, so never forget, trading it's a learnable skill. And if you have any questions, send me an email to the Gmail or say hello on Skype. By the way, if you didn't receive the free manual, ask for it. That's the manual, alright? Is this in, alright, this is in, we're going to get rid of this one. This is in Portuguese for the Portuguese clients. This is in English, alright? And today we are going to talk about consolidation inside the trend. So let's get to it, everybody. Now we are going to talk about why consolidate. So good news and bad news, alright? Let's start with the good news, okay? And let's make it bigger, 40. So it's one more time. It's a trading slash charting concept. All right. Consolidations are a structural part of trends, everybody. Alright, you might know this, you might not know this. Starting from today, you are learning that consolidations are a structural part. Structural part. What could be the example? The structural part of the cell phone or the iPhone. It's plastic. It's the wires, the microchips, alright? So structural part in this sense. Therefore, hopefully my English is correct, therefore are not to be feared, but rather to be expected. Alright, you are going to have and see consolidations inside the trend. Alright, now this is the good news. I mean, it's not really a news, but it's a trading charting concept. Consolidations are a structural part of trends. Therefore, are not to be feared. Why I'm talking about fear? Because I don't know about you personally, but most of beginner traders, the grand majority of beginner traders, advanced traders too, and the grand majority of the intermediate traders, they give back the money to the market when consolidation comes. Alright, I cannot say you because I don't know you, but in general, this is nothing new. This is from, for the last 2 decades, the time I'm around, I've seen this. It's normal, right? Let's say that it's normal, or at least it's not unusual. It's common that, beginner traders, me and you, the analyst, we can make money easily, not a big deal in an uptrend. We can make money in a downtrend, Maybe we have some losers too, but in the end, we know our account is growing. But then we give it back when this sucker comes along, right? It's called consolidation. Hopefully you can relate to this. I don't know, I mean, I'm not going to ask true or not true, but most of beginner traders, intermediate traders, sometimes even advanced traders, you know, they don't know how to behave in consolidations. Some of you might not like consolidations, you know, oh, I don't want to trade consolidations, I hate consolidations. And why? Because consolidations are difficult to spot and you cannot predict consolidation. If you are going to listen to me, please, if somebody is telling you, a TikToker, a YouTuber, a guru, I don't know, that it's possible to predict consolidation, not true. Okay? Not true, you can't. I mean, we can speculate. Oh, consolidation is going to come. We can speculate, but predicting with an amount of probability, no. Make sense? If you have somebody, no, what Mike says is not true, I can predict consolidation with a certain probability, present me the guy. I would love to meet the guy. I would love to meet the guy because after 20 years in the markets, Douglas is going to say, you know, maybe you are stupid, you know, maybe I am. Maybe I am, but after 20 years in the markets, you know, specifically talking about the Forex market, you know, I never seen or saw or you know, yes, fair enough, once the consolidation appears, alright, but you have already 2 lows and 2 highs, right? Once this is done, once this appears, so this part, if I hide the future, you know, then alright, I can do this too. We know how to do it. You're going to learn today. But that you're going to predict from here that this market is going to start to consolidate, no sir. Based on my experience, you know, I don't want to be arrogant or sound arrogant. So this is the good news, and this lesson, it's a lesson, we're moving forward with lessons and knowledge, okay? I'm going to explain right now why we, the beginner traders, the analysts, you're not a trader yet, you're an analyst, but why we tend to lose. And again, good news, it's normal, it's normal in the sense you cannot predict this, okay? I'm going to show you right now how you lose money, how you give it back to the market, okay? So we have an uptrend, and then we've learned that we have an uptrend line. We've learned how to draw trend lines in the correct way, and we've learned that a trend line is a tool that confirms a trend, right? Now, then the market is going to start to make lower lows, lower highs, lower lows, lower highs, and sometimes is going to break the trend line, is going to break the uptrend line, alright? I'm going to zoom in, I'm going to make it bigger. So far, so good. You might think, well, not a big deal, we've learned this is a retracement. Well, yes, we are in a retracement, this is a retracement on the uptrend, but the market, our brain is saying, you know, that is the joke, right? You know, our 2 neurons, you know, or our 1 neuron is trying to look at this and is saying, well, you know, okay, we are in an uptrend, you know, and the green one and the red one, it's a retracement, but we are breaking, or the market broke the uptrend, so I'm joking, of course, but it's normal. We start to doubt, you know, it's especially beginner traders, you know, 1 month in the market, 3 months in the market, 6 months in the market, you know, we tend to doubt, you know, like, okay, what is going to be the deal right now? Agreed? Now remember, I'm sorry, I'm drinking coffee together. So remember, consolidations are a structural part of trends. All right? Now, this is just an example, all right? Now the market is going to start to push up, higher high, higher low, and somewhere in between, and remember, this is an example, somewhere in between me and you, maybe we're going to buy because we believe, oh, the market stopped retracing, made the first higher high, first higher low, so some of us were going to buy, all right? Just an example. But sometimes the market is going to go up a little bit and then it's going to push down and is going to go further down and is going to hit this level in here. Okay, give me a second. Is going to hit this level in here. Basically the market is going to break the low. This is especially common on smaller time frames. The smaller the time frame, the more of this noise you are going to have. Okay, so daily less, the 4-hour chart is going to have a little bit more, the 2 and 1 hour even more, the 15 minutes a lot. All right, but it's not to be feared, it's to be expected. I'm just trying to show you and explain to you how we tend to lose money and give it back to the market. All right, this is not uncommon. Pat yourself on the back. So try to learn this. Okay, when we bought the market, did this trade make sense? We were in an uptrend, I can see it. The market was, at the moment of the buy, the market was above the uptrend line. The more experienced traders are going to say, well, this was a false breakout on the downside. We can say that the market was in a retracement and then stopped the retracement and went back to the extension. So maybe it's a little bit premature entry, but the logic, oh, this is a buy, go long, you know, the market made a higher high compared to this high, it makes sense, agreed? Theoretically at least, right? And then the market pushed down and stop loss goes on the pattern traded, stop loss goes on the pattern traded, stop loss goes on the pattern traded, you know, we were trading the uptrend, the green, and the market stopped us out. Agreed? Relevant low, we've learned this, relevant high, relevant low, higher low, relevant high on the uptrend, relevant low, and relevant high. So we entered long, stop loss was below the relevant low, stop loss goes on the pattern traded. Yes, but I don't want to hear yes, but. That's the rule. Forex course 101, analysts, you know, if you want to partner up in the future, if you want me to give you money through institutions, it's not a joke, all right? I have capital to give you, it's not a joke, it's for real. Call me on Skype, send me an email, we can talk, all right? Pattern, stop loss goes on the pattern traded, period, end of story. So here, not me, well, let's talk about me, all right? I did this, all right, okay. So the market stopped me out. Now, what is my brain, or what is our brain going to think? You know, What do you mean, my brain? Well, what if you see something like this on the chart? What would you think? And again, depending on the level of your skill, somebody is going to say, well, obviously we are not in an uptrend anymore, we're in a downtrend. Somebody is going to think, well, I would stay out. Somebody is going to say, well, I really don't know, you know, it's messy, right? But because the market broke the low, and because we are not in an uptrend anymore, now it depends if you are going to agree with me or not, right? It depends. Some of you have learned a lot of stuff already. Do we agree that our brain is going to start to see extension, retracement extension? The violet one. If you agree, then our brain, what our brain was thinking about, what our brain understood before as a retracement, now it's understanding it like an extension. Does this make sense? Because what we are seeing right now, what the brain is picking up, the price action, it's picking up this circle, circle low, circle lower high, and circle lower low. This is what our brain is going to start to picking up. Make sense? Price action, uptrend, no big deal, no brainer. But now the market broke the red uptrend line and broke the relevant low. But in between the market waved, so it made the down extension, retracement, and another down extension. Sometimes you're going to hear the word mini swings or smaller swings. All right? If this would be the case, now what are we going to do? Are we going to buy this market? If you say yes, like Douglas, you are. I'm not going to say you are wrong, but I'm going to ask you. I'm the student. You're the teacher. Teacher, why would we buy a downtrend? Why would we buy something that is going down? Because I'm the student here, because I can see it on the chart, it's making the circles, it's making lower lows, lower highs. Sell, exactly, we would sell the market, right? And depending on the skill level of yours, you know, some of you are going to sell already, all right? So somebody is going to short in here. Somebody else is going to wait for a pullback or a retracement, is going to wait for the market to do something like this and short the market in here. Just an example again, all right? Let's color code this in green. Somebody is going to short already in here. Somebody is going to wait for a pullback, counter trend line, which we didn't learn yet, to be honest, right? And somebody is going to short the market in here. Give me a second. You know, had a pullback. Because somebody is yelling at me, what's wrong with this? Nothing wrong. This is what the brain it's seeing, makes sense? The price action. How we interpret what is happening on the chart. Now the issue is that this short, meaning sell, and this short position, short or sell, it's the same vocabulary. Those two, you know, and again, it's just an example. Somebody is going to sell in here, somebody is going to be a little bit more advanced, is going to short on a pullback, counter, trendline break, right? And again, especially the second one, the more advanced, is going to short with reason, because he and me, we are going to see, well, there is another lower high. So up trend line break, the red one, you know, and now the circle, the violet circles, the market's making lower lows, lower highs, agreed? But the market is going to do this, going to go up and stop us out up in here. Now you could have the stop loss up in here somewhere because you are shorting the red or the violet, you know, or you would say, okay, my stop loss it's above in here because I'm shorting all of this downtrend. The market is going to go up and is going to make a higher high and is going to stop us out. How many of you can relate to this? How many of you can relate to this? You can type in the comments below the video, me, I can relate to this. This happens every single day, right? To everybody. Can you relate to this? This happened to you? And don't be shy, everybody. I'm the first one I'm going to always in this course, and especially in the advanced institutional trader program, I'm going to be always the first one to tell you, you know, I did this mistake, I did this wrong, I didn't listen, I was not coachable, this is me losing money, I had this loser. So don't be shy, make sense? If you didn't experience it's alright, but don't be shy, okay? So the market is going to stop us out. Now, what is... Today it's funny, right? But back in time it was not. What is our brain going to think? Or if I take the word brain out, what would you think now? If you are the analyst, what would you tell the trader to do? Buy or sell? So firstly, the market made just for a pip, just for a tiny pip or maybe 2 pips, the market made a higher high. So you as a good analyst, you are going to draw another higher high. Agreed? And good news for you, there is a higher high. And your brain is going to also take the trend line, or my brain, you know, we are going to take the uptrend line and we are going to readjust the uptrend line. And this is the correct thing to do too, right? A trend line is a tool that confirms the trend. If the market made a higher high, this confirms the uptrend. It's a fact. It's not debatable. But what I'm going to also understand is that, oh, this now it's the relevant low. So this is not anymore the relevant low, that's the relevant low. Alright? And this is not the relevant high anymore, because a trend is a sequence of low highs and lows. Then I'm going to readjust the trend from here to here. I mean, the price action is going to stay the same. Let me do it in a different way. So what I'm going to see, I'm going to readjust the uptrend low to high, high to low. Now remember, this is now the relevant low. High to low, low to high. Make sense? I cannot put this high because after the high, the next one must be a low, and this is the relevant low on the trend line. Okay, so this is now the new uptrend. Price action, the green stays the same, but let's make it blue. This is now the new uptrend. The market make a higher high. It could be for 1 pip a higher high, could be for 2 pips a higher high, right? So if the blue stands, and there is, you can see it on the chart, and you readjusted the uptrend line in the correct way, congratulations to you, and there is a higher high, relevant one, and there is everything, it's well, right? So you're going to tell to your trader or yourself if you're retail that, oh, this market, it's, I mean, there was messy down in here, I lost, you know, and we shorted because trend line break and lower low, but now the market resumed back to make a higher high. So the blue is the leading force, so I'm going to buy, right? Make sense? Just an example. So somebody's going to buy up in here, you know, buy the breakout is the technique that in the forex market doesn't work, in my opinion. Talking about most of the time, buy the breakout. Not a lot of traders are consistently profitable with breakout, but anyway, this is another book for another day, another story. Somebody a little bit more advanced is going to say, alright, I'm going to wait for a retracement and then I'm going to buy in here, right? Counter trendline break again. We didn't learn counter trendline breaks, but trendline break, the market was making lower lows, lower highs, it was a retracement, all good, we've learned this, not a big deal. Market made a higher high, so this high, it's higher compared to the previous high, and now somebody's going to say, oh, this is best support in here too, and we are going to buy the blue, right? We are going to buy the blue uptrend, agreed? All right. And again, somebody, the stop, you're going to hate me, but this is how it happens. And again, stop loss goes on the pedant trade, that somebody's going to put the stop loss down in here, trading the green, somebody's going to put stop loss below the blue, right? The pattern, the relevant low. And the market is going to do this, is going to stop us out again. And you are, so the first time this happens, it's alright, it's not a big deal. But when it happens the second time, you are going to start to scratch your head like, what the heck is happening in here? I have 2 losers in a row. I have 3 losers in a row. What the heck is happening in here? Well, I'm not sure if it's good news or bad news, you know, whatever. We are in consolidation. Alright, everybody? So the same things are going to now, what is the bad news? As soon as you spot consolidation, you must be aware of the consolidation and trade in the direction of the trend. I'm going to explain to you, but just write this down. As soon as you spot consolidation, and most likely consolidations come when you have 3 losers in a row in the opposite direction. You bought the market, you lost. You shorted the market, you lost again. You bought the market. When you lose 3 times in the opposite direction, there is an 80% chance you are in consolidation. And give it a like, give it a thumb up if you find values. This is very valuable, you know. Oh, nobody told me this, you know. Yes. But you must remember the rules. It's not if you lose 3 times. If you lose 3 times, one after another in the opposite direction. You are going to use this technique in Fibonacci trading, the lessons that are coming. Alright? So, number 1, when you're in consolidation, stop trading for a second, pause, and I'm sorry that this happens, right? We were making money in an uptrend and then we gave it back 2 times, 3 times to the market. We were making money in a downtrend and we gave it back to the market again, right? And I'm writing a new book, it's going to come out next year. This is what it's called the winner-loser cycle. Beginner traders, intermediate traders, advanced traders when we don't get the market, we didn't learn the market, then we are locked in the winner-loser cycle. What is the winner-loser cycle, boss? It's me and you having a winning trade and having a losing trade. So you have winner, winner, loser, winner, loser, winner, 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 loser, loser, winner, loser, 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 winner, winner, loser, winner, loser, winner, winner, loser, loser, winner, winner, loser. Make sense? You cannot achieve consistency, you cannot achieve profitability, you are not going to be profitable month after month after month, because it's, pat yourself on the back, it's normal. Don't judge yourself, I'm not judging you, I'm trying to give you a class and explain. This is totally normal. The winner-loser cycle, it's normal. Everybody goes through it. Talking about beginner traders and intermediate traders, all right? So when we lose for the second time or the third time, it's because we are not aware that this market works like this. Extension up. Let me use another one. Extension, retracement, extension, consolidation. Retracement, consolidation. Extension, retracement, consolidation. Retracement, consolidation. Extension, consolidation. Just an example. You are still going to have the uptrend line in red, so similarly to the upper picture, but what we are not trained to spot, what we are not trained to see, what we are not trained to understand is that consolidations are a structural part of trends. They are going to happen, you are going to have consolidations, make no mistakes, so you don't need to fear consolidations. Alright? Just give me a second. Sure, this is just an example. Now, let's ask a few intelligent questions. Question... It's an intelligent question, right? Question number one. Even if you have consolidations, did the uptrend as a pattern, did the uptrend change? Exactly. No, it did not. So if the uptrend didn't change, there must be some ways to trade the uptrend. Wouldn't you agree? All right. So if we chart relevant low, relevant high, relevant low, now it gets difficult, it takes practice, but still relevant high, relevant low. Remember relevant low from the blue? I'm moving the mouse. Relevant high, relevant low, and relevant high again. So this was the first question. Even if there is consolidation, would this break the uptrend, as a pattern? And the answer is no. Intelligent question number two. If I would trade the relevant highs and lows, and if I put the stop loss below the relevant low, let's make it orange, all right, would we or wouldn't we be safe until the market reverses and breaks the trend really? Exactly, the correct answer is yes. So what are we unaware of is that how can I do this, is that this circle, this green circle, or yellow, this yellow circle, no, this blue circle, it's really this blue circle in here. Make sense? What you micromanage on the 15-minute chart, 1 hour chart, 2 hour chart, 4 hour chart, you know, we have difficulties to see the bigger picture. See, because we are in this drama in here, losing money, making money, you know, I lost 2 times, I lost 3 times, what the heck is happening? But if I would go on the higher time frame, and that's the trick, I would see that really, oh, so this big drama, it's really part of the big uptrend from the bigger time frame. Does this make sense? This is how this market works. Okay? Boss, what are you trying to say? When you spot consolidation, go on the higher time frame. If you're on the 15-minute chart, go check the 1 hour. If you're on the 1 hour, 2 hour, 4 hour, go check the daily. If you're on the daily, go check the weekly. To have a better view of, alright, is there a trend still in place? Or did the market change the trend? Me shorting the market, listen up. Listen up, listen up, listen up. Me shorting the market here, it was because of the visual that I had. It was because of the not wrong perception, but I didn't have the whole picture, make sense? Because of the limited vision. Me shorting the market, it was because of a limited vision, because I was not aware that I was shorting the market up in here. Does this make sense? If I would be aware as an analyst that this is the big picture, right? I would see that we are in an uptrend still, so I would not, this is not a strategy, and I'm not talking that we don't have retracement traders and retracement trades. We do, but this is for another time. I'm trying to explain to you that I would not short the market in here, because I would see that, whoa, we are still in an uptrend. And if that would be the case, I would say, oh, but we're also at past support. See, everybody? I shorted the market in here with reason, and there were reasons, but if you go on a bigger time frame, you would see, oh my gosh, I'm shorting an uptrend. This is one of the best lessons, right? For you to go, oh my gosh, this is why I'm losing, or I was losing. You know, if you can learn this lesson well, download the recording, watch it a few times, you are going to start to lose less. Because you would be aware that, oh my gosh, you know, what I believed it's in a downtrend, and all the reasons from the daily example, from the daily chart, I went against the daily trend. So tell me, right? Open conversation. This is common sense. This is if it's not common sense, this is what, it's your homework. This is what must become common sense. Now you tell me, in a set of 100 trades, shorting the market in here, sometimes you can win, fair enough. But in a set of 100 trades, you going against the bigger picture. You are shorting the 1 hour time frame when the daily is at past support. Are the probabilities stacked against you, yes or no? What do you think? Exactly, the probabilities are stacked against you. Somebody's yelling at me, but you told me this market must retrace. Yes, but not when you say. Not when you say. This is just an example, but you shorting the market at past support, relevant high, your probabilities are stacked against you. You are going to, there is a quote, my quote, you are going to, or you could win shorting the market 3 times out of 10 doing this stuff, but you are going to lose 7 times out of 10. The correct answer is, and these probabilities work in the opposite direction too. You buying the market at past support, we didn't learn yet, but you buying the market at past support on the daily, but you are on the 1 hour chart, you buying the market, you are going to win 7 times out of 10, and yeah, right, you are going to lose 3 times out of 10. This is you learning to understand probabilities. Alright, Forex Course 101, it's all about the market, and you trying to understand with all the tools that you are learning, the monthly bands, the market structure trends, called also the market wave, trend lines, you know, and now consolidations, how those, and there is coming Fibonacci, support, resistance, pivot points, multiple time frame trading, you know, you are learning how all of these tools, when they converge, how they increase your probability of your trade. Alright everybody, this is for this lesson. Tomorrow, tomorrow we're going to continue. Okay, this is not the end of this lesson yet. We're going to continue. So until tomorrow, if you have any questions about consolidations and trading consolidations, send me an email. Otherwise, you can subscribe. There is a link below, and here you have the video about how to confirm highs and lows. Alright everybody, so thank you for your time. This is Mike, and see you back tomorrow. Until there, stay strong and don't fear consolidation. Accept consolidation like a boss. And this is the Mike, the boss, signing off. See you tomorrow. Bye bye.